Hi, everyone. I'm Rosemary Miller here with Christy Marvin, the CEO and founder of SPAC Insider, here to discuss Donald Trump's social media company getting destroyed in the stock market today. Thank you so much for joining me today, Christy.
Thanks. Glad to be here.
So, Christy, as I just mentioned, Donald Trump's social media company got destroyed in the stock market. It fell 22% after the company reported financial results for the first time since it was acquired by a SPAC. The shares are now at about $48.51, and this is the first time they've closed below the $57.99 mark on March 26th. So the first day of post-acquisition trading. Christy, was today's data really that surprising? Didn't investors know that the true media and technology was losing money?
They did, yeah. I mean, here's the thing. Everybody wants to assume that it's trading down because it reported financials. I'm not quite sure that's the reason. I think everybody at this point understands that this is a meme stock, right? And meme stocks don't trade on fundamentals. It never did to begin with. And so to now say that it's trading down based on fundamentals, it's like you can't have both worlds, right? So I simply think that it's post-holiday. Might be a little bit of meme fatigue, but the fundamental thing about a meme stock is you just don't know how it's going to trade, and it's highly volatile, which we're seeing. The other thing too to keep in mind is, yes, it traded down. It's trading in the high 40s, I believe, but it's still significantly above its initial $10 IPO price, right? So it has come down, but it's still quite elevated.
Well, Christy, after today's fall, Trump's media company was still worth $6.6 billion on the stock market. Does that make sense when you compare it to other online companies?
No. Put simply, it doesn't make any sense, right? But again, like I hate to keep going back to the fact that this is a meme stock, but fundamentally, a meme stock does not make sense, right? Like if we think to GameStop, right, which is sort of like the godfather of meme stocks, that didn't make sense either. That wasn't the point, right? People were buying that because they wanted to, it was part of a movement, right? And they kind of wanted to stick it to hedge funds, particularly at that point, Melvin Capital. I suspect there's something similar going on with Trump, right? People are buying it because they like Trump, not necessarily because of the fundamentals. And, maybe the same people or additional people, they do not like the political class, right? And buying the share is a way of them, voting against that. But, look, the thing is this stock, like even if you go back to January when it was still a SPAC, pre-SPAC, pre-DSPAC, it was trading volatilely based on election news, right? So like if you go back to January, the Iowa primary, which I think was January 15th, DWAC, the share, which was his symbol back then, was only trading a couple 100,000 shares a day. Post that primary, it jumped to 8 million, right? And the share price moved, I believe, something a little bit north of $5. And then the same thing happened a week later with the primary in New Hampshire. It then started trading around 29 million shares that day. And I believe it almost doubled and traded close to $50, which it's sort of traded around since.
So Trump's media company didn't post the other things that other unprofitable social media companies typically post, like monthly active users. What do you think about that?
I mean, at some point, I think investors will sort of require it, right? But they are still sort of a new company. So, let them maybe find their feet first. I mean, the thing is, though, about social media companies, as we've seen with Twitter and Snapchat and some of the other ones, they're notoriously difficult businesses to run. Twitter, I think it had only become profitable in 2021 after being in existence for like 15 years prior, right? It's very, very difficult businesses. So, we'll have to see.
So what does the market reaction today indicate about Trump's chances of pulling some cash out of the company to meet his legal bills?
Well, yeah, there's been a lot of speculation about that, right? There's he is currently under lockup for the first 6 months post closing. That can be released early, but not much earlier to 150 days, which is 5 months, if the share is trading above $12, which most likely it will be at that point. But a lot of the speculation that we've seen recently is that the board will approve an earlier release, which they can do. We'll see if he does it, but that is always a possibility.
Well, is there anything else on your radar regarding this whole stock plummeting that you believe should be on ours?
Well, listen, it's difficult, right? Having, worked on the street for a while and, in banking, we're also used to evaluating companies based on hard data, real numbers, revenue, profitability. It feels like we're kind of entering a new era with some of these meme stocks, where, I mean, maybe the banks should be hiring social psychologists to figure out, how retail is trading some of this stuff, because it's clearly not based on the analysis we've been used to in prior years.
Well, thank you so much for joining me today, Christy.
No problem.